Hi, hello everyone. Today we'll be looking at the amendments to IAS 8 on accounting estimates. IAS 8 is on accounting policies, changes in accounting estimates, and errors. Table of contents. So we'll be looking at the objective of the standard, scope of the standard, definition of some of the terms used in the standard, selection and application of accounting policies, consistency of accounting policy. We also look at the changes in accounting policies, amendment to IAS 8 on accounting estimates, and of course, effective dates and transition of the new standard. Objective of the standard is to enhance the relevance and reliability of an entity financial statements, and also to clarify the interaction between an accounting policies and accounting estimates. The scope of the standard. This standard shall be applied in selecting and applying accounting policies and accounting for changes in accounting policies, changes in accounting estimates, and correction of prior period errors. Definition of some of the terms in these standards. One of the terms in this standard is the accounting policies. So accounting policies are the specific principles, bases, conventions, rules, and practices applied by an entity in preparing and presenting financial statement. Changes in an accounting estimate, these are an adjustment of the carrying amount of an asset or a liability, or the amount of the periodic consumption of an asset that results from the assessment of the present status of an expected future benefits and obligation associated with assets and liability. Changes in accounting estimates result from new information or developments and accordingly are not correction of errors. So we also have prior period errors. So prior period errors are omissions from misstatements in the entity's financial statement for one or more prior period, arising from a failure to use or misuse of reliable information that was available when financial statements for those periods were authorized for issue and could reasonably be expected to have been obtained and taken into account in the preparation and presentation of those financial statements. Such errors include the effects of mathematical mistakes, mistakes in applying accounting policies, oversights or misinterpretations of facts and frauds. Retrospective application is applying a new accounting policy to transactions, other events, and conditions as if that policy had always been applied. Retrospective restatement is correcting the recognition, measurements, and disclosure of amount of element of financial statement as if a prior period error had never occurred. Impracticable. Applying the requirement is impracticable when the entity cannot apply it after making every reasonable effort to do so. Prospective application is the application of a new accounting policy to transactions after the date of the policy change, with recognition of the effect of changes in accounting estimates in the current and future period. The change is not applied to prior periods. So, for the selection and application of accounting policy, you select specific IFRS for specific transactions, other events, or conditions that they relate to. So, in the absence of specific IFRS, apply judgment and considering relevance, reliability, and the following in descending order. 1, similar IFRS that relate to the issue. 2, go back to conceptual framework. 3, the most recent pronouncement of other standard setting bodies that use a similar conceptual framework to develop accounting standards. 4, accounting literature and accepted industry practices. Consistency of accounting policies. Accounting policies should be applied consistently for similar transactions, other events, and conditions unless an IFRS specifically requires or permits categorization of items for which different policies may be appropriate. Changes in accounting policies. An entity shall change an accounting policy only if the change is required by an IFRS or results in a financial statement providing reliable and more relevant information about the effects of transactions, other events or conditions on the entity's financial position, financial performance, or cash flows. Amendment to IAS 8 on accounting estimates. So the background to the amendment is that most preparers of financial statements find it difficult to distinguish between accounting policies and accounting estimates. Enforcers have identified divergent practices. An interpretation committee received a request to clarify the distinction, which was also passed on to the IASB. So on the 12th of February 2021, the International Accounting Standard Board, the IASB, or the board, issued amendments to IAS 8 accounting policies, changes to accounting estimates and errors, in which it introduces a new definition of accounting estimates. The amendments are designed to clarify the distinction between changes in accounting policies, changes in accounting estimates, and correction of errors. So these are the amendments to the standards. So one of the amendments is that accounting estimates are now defined as monetary amounts in financial statements that are subject to measurement uncertainty. Another amendment to the standard is that entity develop accounting estimates if accounting policies require items in the financial statement to be measured in a way that involves measurement uncertainty. Accounting estimate typically involves the use of judgments or assumptions based on the latest available reliable information. The board also clarifies that a change in an accounting estimate that results from new information or new development is not the correction of an error. In addition, the effect of a change in an input or a measurement techniques used to develop an accounting estimate are changing in accounting estimates if they do not result from the correction of errors. Also, a change in an accounting estimate may affect only the current period's profit or loss, or the profit or loss of both the current period and the future periods. The effective dates of the amendment to the standards. The amendment becomes effective for annual reporting period, beginning on or after 1st of January 2023, and apply to changes in accounting policies and changes in accounting estimates that occur on or after the start of that period. Earlier application is permitted. Thank you very much for watching. See you next time.